Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Friday, November the 29th, the year 2019. Let's talk trading. It's Black Friday. It's also time for the weekly wrap up and the monthly wrap up. Um, of course, this month, this week, I know each and every one of you watching this video used your risk management. So on your losers, you didn't lose any more than you were willing to lose on that trade. And that's because you had your position size correctly, and you had your stop loss in place at the proper place. You know, one thing about trading is it's feedback. You get constant feedback when you trade. You put a trade on and either it starts to win or starts to lose, and you get immediate feedback. And maybe you wait a little longer and maybe fortune has turned your way, or maybe it's turned against you. But the thing is, with each tick, you're getting feedback. The thing is, what are you doing with that feedback? Are you sitting there watching, just spectating, or are you using that feedback in some way to enrich yourself? And then if you look at the feedback here, we've got two pairs that didn't fill the gap, okay? But we know if you go through videos, usually this column says fill across the board. But that's feedback. It's telling you that this is a way to make money, playing those weekly gaps. You know, you got feedback right here. It's like the price hit the previous week's high and it broke out. That's giving you feedback right here. So that's telling you, hey, maybe if I take these trades, there's going to be profit, a chance for profit, an opportunity to profit. So if you think in terms of feedback, then maybe you can take some of the emotion out of trading and you can be a little more profitable. Now take a look at this. Price actually got over the yearly open. You know, if we look at the month chart here, you can see what price has done for the year. It looks like a big sine wave, right? Went up, came all the way down, and now it's pretty much back to where it started. You know, there's some feedback in that. What does that tell you? I mean, we can look at let's look at another pair. Let's look at the euro yen. It dropped below. It hasn't come back. Is that what feedback do you get there? Dollar Canadian. The same thing. Euro. Let's look at the euro and see what happens. Some of these take longer than others because I don't really look at them, so it has to load up the history. And look at the euro. And let's look at the pound. Once again, this is feedback. And let's get the dollar franc just to get the rest of the majors in. So here's the feedback here. What can you do with that information? How can you use it? That's what you have to figure out. How does this work in your trading plan, in your trading method? Okay, you can see here we're close to the top, to the high of the first trading day of the year. We poked above that open, but now we're back below it. And the weekly range chart, weekly buy zone, you can see here from Monday it was just steady movement to the upside. Now, according to I guess stats, possibly popular belief, it says that the markets trend about 30% at a time and they range about 70% at a time. So basically they're saying about 30% at a time they break out and they establish a new range. And if you look at the hourly chart here, you can see how price right now for the past couple of days has ranged, between the 60 and the 30. Okay. Oh, one other thing here on the chart. Range this week, 107. Average range, 140. Still below average. We had an inside bar yesterday. I mean, it was Turkey Day, right? Thanksgiving, so not much action. But here, once again, there was a breakout of the previous day's high. It was an inside bar. So there was an inside bar trade to be had. And showing once again here, 3 pairs over 100 in range. And you can see what's happening here on the day. It went through that upper wick zone, came back down, and it went down through the upper wick zone. So, I know there's some traders struggling with the wick zone, but if you can't see that this can be profitable, then you just shouldn't be trading it. Granted, that wick zone was only 3 pips. So it was definitely a quick trade. Monthly H1 highest open. Monthly D1 highest open. You can see here price fell below, reversed off this one, or reversed through it, I should say, and then came and reversed through here. We put in daily H1 lowest open the past hour, and now price is going the other way. And if you look back here, you can see these wicks support or an area where price has risen. Pivot point was close to the open, got taken out, no biggie, 4 pips. But then again, you can see if you want to trade that pivot, even though it's close to the open, you could load up and go for it and make your 4 pips. And your position size could be larger than normal. Of course, if you kind of jump the gun here, you might have gotten stopped out. But actually the pivot was above the short zone. So you're just looking for a candle to give you that. And so if you loaded up position size here, you might only be a pip or 2 to the good. It comes back. You just take that 1 pip, especially if your position size is large. You take a half a pip. You don't let the market catch you. Rat zone, caution, range too low. We saw we took out the pivot. We almost got to the daily R2. We almost hit the daily S1. So price once again ranging in those pivots. We hit the pivot. So for the month, it looks like we're going to have 2 missed pivots. And we missed the one yesterday by 5 and the one earlier this month by 5 pips. Price action. Let's see here. If you look on the H4 chart, you can see how price is settling in between 40 and 50 with a couple of breakouts into the 60 area, between the 50-60 and even into the 60-70, but it reversed, came back down to the 40. So you can see the reversal action happening in this area. And that's on the H4 chart. And we can even shift H1. And you can see it clear. But notice, see price dip down here. And it was cutting across these 4 wicks here, and there's a 5th one right there. And you see price has hit and moved up. That was telling you something. That's feedback. So when price came down here and started to retrace, even though the H1 candle's red, pro traders can go ahead. They could have gone ahead and taken that trade and picked up a handful of pips. Now, once again, you have to be careful if you're trading against the H1 candle color, because you see, if you tried it the second time, you probably got a couple of pips. Not many, but you definitely have to be quick, not be greedy, and take what you can and give none back, as I say. Showing that 3 pip zone here, pretty much trading with the H1 candle color. Looks like it would have been safe here. Bull candle. There was a nice move here, coming in here with the bear candle right at the line. You see there was pips to be made here. Bull candle exiting, pips to be made. Bear candle piercing through, pips to be made. Once again, we saw this on the previous price action chart, but you can see it here just trading the wick zones. And even here, long at the line, could have picked up 2 pips because it went in, coming out. So right there, this is a clear example of what a 2 pip trade could look like, because you're getting a reversal signal right here. Even though it was a bull candle at the time, it's coming back through. Price is saying nope, coming out of that zone. You just have to follow price, follow the feedback, read the chart, follow the chart. But I think what happens sometimes to traders is they have a bias, they have a desire. So if they're long, they're looking for reasons to stay long, to get long. They have that long bias. And even though the market's saying, well, right now we feel we're doing a short, some traders are ignoring what the market tells them, only to their own peril. You can see here price hit that weekly ATR zone, and I think I've answered all the ATR questions that I've received over the past week or so. So I think everybody's up to speed on the ATR. And right here on the daily, we hit that ATR minimum. We reversed off. We passed through it, but then we reversed. We reversed out of the ATR zone, the weekly ATR zone here. And so you can see that was a nice reversal. That was almost 20 pips if you got out right at the line. But here, that nice hit, if you targeted the ATR zone here, or actually the halfway point from open to the ATR zone, that was a very good target and a nice place to take some pips. And that would have been worth, a dozen pips or so. So, 5 pips here, 2 pips there, a dozen pips there, it adds up. You just can't be greedy. So, fellow traders, that's the weekly wrap up, the monthly wrap up. I hope your week and month are profitable. And if you're going out for Black Friday, I hope you have a safe Black Friday. You don't wind up on the Black Friday death count. So I hope you all have a safe weekend. And when you come back next week, just keep in mind, it's not what you trade, it's how you trade it. So come back next week, next month, and let's all drain the banks.